12 companies you have never heard of can stop every ship on Earth from moving with one phone call, no navy, and no government required. Lose their signature, and a 200,000-ton tanker becomes scrap metal, because no port on the planet will let it dock. These 12 are not shipping lines. They own no ships. They are insurance clubs, and together they insure roughly 90% of the world's ocean-going fleet, because without their certificate, a ship cannot function as a ship anywhere on Earth. Every port and canal authority on the planet demands proof of this coverage before a vessel comes near the dock. Coverage for the disaster, not the cargo. That coverage comes from exactly 12 mutual clubs, banded together since 1899. Right now, that system is being stress tested by the ships it was built to control. Russia's shadow fleet cannot get this coverage anymore, so it sails on fake certificates that pay nothing in a real disaster. 300 of those tankers are already moving through the world's busiest straits. The 12 clubs work like a private central bank for ocean risk. Each insures its own shipowner members who pay in yearly like a subscription, and in return the club promises to cover almost any disaster that member causes at sea. A tanker runs aground and spills crude into a fishing ground. A container ship clips a bridge support. A crew member is hurt loading cargo in a foreign port. All of it runs through the same 12 clubs, and none of it runs through a government agency at any point. Here's where the real power sits. If one member causes a disaster bigger than its own club can pay, for example, a spill running past $1 billion, the other 11 clubs are contractually bound to absorb the overflow through something called the pooling agreement. A single collision in a strait becomes every club's problem within hours, spread instantly across all 12, then reinsured again through a separate layer bought from Lloyd's of London and a handful of global reinsurers. That combined tower of cover can reach past $3 billion on a single incident, which is roughly why no government has ever needed to build a state insurer for ocean shipping. The clubs already absorb catastrophes at a scale most national treasuries would not want to touch. Each club sets its own retention level, typically several $million per claim, before it dips into the shared pool with the other 11. Above that shared threshold, a second layer of commercial reinsurance kicks in, arranged as a single group program every year, renewed each February in London, regardless of what happens to any single membership. A disaster off one coastline in January can quietly raise the price every other member pays worldwide by the time that renewal date arrives, because the whole industry effectively insures itself as one entity, not 12 separate ones. Port state inspectors do not verify a shipowner's balance sheet or its safety culture in real time. They check the blue card, confirm it is current, and let the vessel through. That single piece of paper, renewed every year, is treated as proof that if the worst happens, a serious payer sits behind the ship. It is the same shortcut a landlord uses when a tenant shows proof of renter's insurance instead of a bank statement, scaled up to cargo worth hundreds of millions of dollars and coastlines that cannot be replaced. This is also why almost nobody outside the industry has ever heard their names. Gard, Britannia, Skuld, the UK club, the Japan club, the Swedish club settle claims worth billions every year, operating quietly out of maritime capitals like London and Oslo without a single press conference. The entire global shipping fleet moves on the strength of 12 private signatures. Here is the part almost nobody clocks. Because ports everywhere quietly outsource their safety judgment to these 12 private clubs, the clubs have become the actual gatekeepers of who gets to trade by sea, a power no single government holds over the entire planet's ports at once. When the group blacklists a fleet, it is not a court ruling. It is 12 private companies agreeing off the record that a few hundred ships no longer get to exist in the legitimate ocean economy with no appeals process, because there was never a law to begin with. A shipowner who loses that blue card cannot simply reapply to a regulator or fight the decision in a courtroom built for exactly this purpose, because no such courtroom exists. The clubs are private mutuals, owned by the shipowners who are members of them, and membership decisions are made behind closed doors using risk models the clubs do not publish. A tanker fleet can spend decades building a spotless safety record and still lose coverage overnight if its owner starts moving oil for a sanctioned country, because the club's own reinsurers, sitting one layer up in London, will simply refuse to renew the tower of cover behind it. This means 12 companies effectively hold veto power over which fleets can trade freely by sea, a level of leverage most foreign ministries never openly acknowledge, because the system was never built to be visible in the first place. The clubs answer to no government. They are mutual associations, owned by shipowners, headquartered mostly in London and Oslo. When they decide an owner is too risky, that owner has no regulator to appeal to because there is no other real market of comparable size or reliability. Lose the coverage, and the only remaining option is a much smaller circle of shadow insurers, some registered in Moscow, some little more than a name on a policy document, who charge triple the premium and disappear the moment a real claim arrives. This is exactly what has happened since the sanctions on Russian oil exports began. Ships that once carried International Group certificates now carry policies from insurers. Nobody in the legitimate market will underwrite reinsurance for, because those insurers themselves cannot get reinsured by anyone the 12 clubs recognize. Some of these shadow policies trace back to Russian state-linked reinsurers themselves under sanctions, meaning the guarantee behind the guarantee is also unreliable, a stack of paper promises with less real capital behind it at every layer down. A tanker can still sail under one of these policies. It can still load crude, still cross an ocean, still unload at a buyer's terminal on the other side. What it cannot do is guarantee that if something goes wrong, there will be real money behind the claim. This is why the shadow fleet is not a side story. It is a live experiment in what ocean trade looks like once that cover is stripped away. Premiums on those uninsured tankers run a fraction of legitimate rates, paid to obscure companies that will not answer a claims letter. And many of the vessels themselves are decades old, bought secondhand specifically because they were cheap enough to risk losing entirely. Insurance auditors who track this quietly estimate that a meaningful share of the tankers moving sanctioned oil today would fail a real underwriting review within days if anyone forced them through one. Some sail without functioning satellite tracking, switching transponders off for stretches of a voyage specifically to avoid scrutiny near contested straits. Others use ship-to-ship transfers in open water to obscure a cargo's true origin before it reaches a buyer. A practice that itself raises collision risk between two loaded tankers with no working insurance behind either one. Coastal states along the routes these tankers use, the Baltic Sea and the Danish Straits, have started demanding proof of real insurance before letting them pass, and some of these tankers simply cannot produce it. A few have been boarded. A few have had their flag registrations pulled overnight once a flag state realized it was vouching for a ship with no real coverage behind it. None of that has stopped the fleet from growing. Every month, more aging tankers get pulled out of layup, repainted, reflagged, and sent back to sea carrying cargo that legitimate shipping companies will not touch. And the clubs know this cuts both ways. Every serious maritime lawyer watching the shadow fleet is asking the same question. What happens the day an uninsured 200,000-ton tanker ruptures near a major port? Not a remote spill in open water far from anyone's coastline, but a rupture near a harbor, a fishing fleet, a stretch of coastline that depends on tourism or seafood for its economy. The nearest Coast Guard would have almost nothing to draw on because the ship at fault is carrying a policy that will not pay, backed by a company that may not even answer the phone. The 12 clubs built their entire quiet authority on being the only real backstop for catastrophe at sea, a promise that whatever goes wrong, however large, the pooling system and the reinsurance tower behind it would eventually pay for the cleanup. For the first time since 1899, a few hundred ships are sailing the world's oceans with nothing behind them at all, and the 12 companies that quietly run global shipping have no mechanism to force those ships back inside the system they built. Every product on a shelf near you crossed an ocean insured by one of 12 companies whose names you have never seen printed anywhere. That system has quietly decided which ships get to exist for well over a century now, settling disputes, absorbing disasters, and certifying trust in a way no government ever had to build for itself. It is now facing the exact scenario it was built to prevent, a fleet of ships operating entirely outside its authority, moving cargo through some of the most trafficked waters on the planet with nothing standing behind them. If one of them goes down near the wrong stretch of coastline, there is no clear answer for who pays, because the system was never designed to say no to the ocean, only to insure whatever crossed it.